but everybody else probably sleeping now. But those are the things I would be looking at. All right, cool. Well, I'm gonna go ahead and share my screen. There'll probably be a few more people that jump in, but let me figure out where my PowerPoint is here. Can you guys see that okay?
Yes.
Yeah,
Yes.
cool. All right. So hopefully you guys are here for the market update. If not, you're welcome to stay. All right, a little bit about me. I think everybody on here pretty much knows who I am, so I'm gonna jump past. Um, Lots of the same trend conversations that we've had over the last several months, but I think there are still continuing to be some interesting things happen. And one of the things that I'd love to have a conversation about, but I'll talk about. And if you guys don't want to get too deep into it, but I'd love for you guys to ask questions, is a lot of the narrative happening, and obviously it's an election year, so this always happens. Well, it's midterms, not nearly the event that a presidential election year, but still lots of conversation politically, let's say. And I know there in Ohio, you guys have some much crazier races that are close. And for a while, I feel like Ohio's been like kind of on the back burner in terms of importance. But I think this year there's going to be a lot of eyes, and I know there's already a lot of spending happening. But the interesting thing is the negative talk about the economy is actually not in line with like the consumer behavior. And so it'll be interesting to see. And I've got lots of that data. So I'd be interested to get you guys' feedback as well, because I think we're in a weird time where we have so much media. And it doesn't matter what side of the aisle or anything like that. There's just so much conversation that I almost feel like the data, like everything's an interpretation of the data, and very often there's very little conversation about the actual data itself. So I'll be interested to see if you guys are surprised by some of this stuff. But that rolls perfectly into this. Like the reality, guys, is I'm a nerd. Like I spend an hour to 2 hours every morning listening to CNBC. And then I also read articles all the time, and I spend about 4 hours putting this together every month. And so, like, you don't need to know nearly the amount of information that I do. Like, at some point, it becomes like a very much a diminishing return. So if you're somebody that jumps on here just to like get the advantage of all that time I spend, and you're like, hey, I just want the one nugget this month, like I think you're in the right place, number one. And number two, you're probably a lot smarter than me, because you can go like do prospecting during that time instead of doing all the listening. So please don't ever feel like you need to know all of this stuff. I think you really need to know one or two things, and I'll point out the one or two things that I feel like are most important out of the data, but it's mostly just to do with how the market's behaving and how that correlates into conversations with buyers and sellers. But I do think having a little bit of context can help you, especially with some of the higher end people, or maybe just more difficult clients who do want, like if you were trying to sell my house, like I would be asking some crazy questions. But even if the answer is I'm not sure, let me find out or whatever, that's going to be good enough for 99% of buyers and sellers. So if we jump in, I mean, interest rates really since 2022 have been the story, right? Now the question is what actually influences those, and that's what we'll get into. But I would say at this point, year to date, our biggest conversation point is that just before the Iran conflict, war, whatever the heck you want to call it, happened, we were on a really good trend line. You can see that actually we aren't far off. We're now above where we were last year at this time, but for most of the spring and summer, we actually had still been below where we were a year ago. We are actually now above where we were a year ago. But you can definitely see that we were in a much better place. Prior to this conflict with Iran in terms of interest rates. And we'll jump into the reasons why I think that is. But ultimately, that's the story. We've actually been fairly level, like Joel, you were saying, over the last several weeks. There has really not been a lot of fluctuation at all. Frankly, there hasn't been a lot of reason for fluctuation. I mean, oil prices have kind of gone up and down daily. There's been some like actually better than expected inflation reports that point to lower than expected inflation, but still inflation is above the 2% target that the Fed says publicly that they want to be. And so the long-term market, which is basically what mortgage rates are based off of, still believes that inflation's too high and government spending is too high. And on the contrary, I don't have a slide on this, but if you don't follow, maybe you don't know. But last week, our national debt eclipsed $40 trillion. And so those types of things also, although the rate of increase isn't really any different than it was 6 or 12 months ago, the reality is the politicians and frankly, the American people, no one wants to sacrifice anything no one wants to cut a government program in order to lower the national debt, for example. And so because of that, the politicians also don't want to do that. And so we're just on this trajectory where that's just going to keep going up. And the reality is the long end of the curve, they call it, or the 10, 20, and 30 year um, bond products, which obviously like the mortgages are a 30-year product, if you think that interest rates over time are going to go up because the debt is going to increase, then you don't want to lock your money in at a lower rate. So all right, yeah, here's just the perspective. So year over year, as you can see, we are higher than we had been in the past or a year ago. This is courtesy of Claude. I cannot take credit for this, but this is the dotted line here are the interest rates, the average interest rates by day, basically. And then the dark orange line here is the oil price per barrel for WTI crude, which is basically the oil that we sell here in the US. Um, Brent crude, which comes from the Middle East, follows the same trajectory. It's been a little bit more expensive for obvious reasons, but still, like ours, it's about the same. So you can see that, like at the beginning of the war, they followed a trend line almost exactly. Oil obviously fluctuates a lot more, basically on the news, for lack of a better term, but in general, they were moving in the same directions. They're continuing to move in the same direction, but the gap of increase or decrease. So the biggest change was here when oil really dipped down. I think I can't even read what this says, but I think it was when we signed that memorandum of understanding and everybody thought maybe it was going to end. Oil prices went way down really quickly. Interest rates did a little bit, but not as much as you can see. And then as soon as oil prices started going back up again, interest rates kept going up. And in spite of oil falling, interest rates just stayed high. And then you can see like the last few weeks they've been relatively level. But again, as I was talking, many of you guys jumped on after, but Joel asked like, do I think rates are going to change much between now and the end of the year? My guess would be probably not, unless we see a very quick end to the Iran situation and subsequent like drop in oil prices. But one of the issues that we're having now, without going too deep, is that oil prices are one thing. That's what we call like unrefined. But then the second thing you have to consider are gas prices. And unfortunately, there are refined products that also come through the Strait of Hormuz. And oil, in America, we're drilling more oil, but we haven't opened up a new oil or gas refinery in the US in like, I think 20 or 30 years. We're about to open the first one, I think. But because of that, we've closed a lot. And so even though we're producing more oil here, we actually don't have an increased capacity to refine it into gasoline or airline. Like we let that happen at a higher level in the Middle East and other areas. And so the fact that we have oil is great, but the biggest concerns at this point with regards to gas prices, which aren't on this chart, but is the fact that there's just less and less gas refining capacity. Like all the refineries in the US have been running basically near 100%, where they typically like go offline for a month to fix things. And so the concern is that you're going to have a refinery that kind of breaks down, to put it in layman's terms. And if that happens, we'll see oil prices won't necessarily be impacted by that, but most of us just really care about the gas. And so if gas prices go up, we'll see inflation go up and interest rates will stay elevated. Now, here's what I was talking about early on. So, one of the things that's really interesting, and we are starting to see consumer confidence come up again. Um, or I'm sorry, I lied. We saw it pop up in July, but then it's gone back down this month. But one of the things that's interesting to me is that when we go to the next couple slides, we'll see that consumer confidence is just not in a great place, right? Like you can see that the consumer's expectations are down. Consumer confidence has been kind of wobbly all over the place. Um, but at the end of the day, like when we look at year over year changes, it's very negative. The interesting thing, though, is that people are making more money and spending more money, much more money actually, than they did before. And they're not going into credit card debt because they're making more money. But obviously, according to these surveys, people feel like they're not doing anything. And this is actually even if you exclude gas prices, which we'll get into in a second. So basically everything, and actually I didn't fix my arrows. Um, but basically everything's going in kind of the wrong direction. But still, it's just interesting to see consumer confidence. I wonder why that like that. Sorry, guys. I don't know what's going on there. Um, it was a highlight when I did it, and then now it's like blocking it out. But basically, I'm going to read a little bit just because it's written really well, but essentially, spending minus gas prices. I just don't know why it came through. I hope this didn't happen everywhere where I highlighted. Spending minus gas prices rose by 4.2% year over year. Um, and actually, the lower end of incomes is going up more than the higher end, excluding the top 5% of earners. So the really, really wealthy, like the extreme wealthy, are just make spending a lot more money. The hypothesis behind that is just the fact that they have a lot more money in the market, and the market has just been crazy. I mean, you just look at something like, I don't know the exact numbers, but like the SpaceX IPO. So, like, for those of you that have never been part of a startup, I've never been part of a startup in Silicon Valley, but from listening to CNBC, my understanding is that a lot of these people, they go to work there, and part of the way that you draw people away from I'm trying to admit this person, and for some reason, I guess if I'm on the laser pointer, it won't let me, which is really weird. Um, but apparently, when you go to work there, one of the ways they draw you away from another company is by giving you stock options, essentially. So if the company does really good, then you'll get stock options. And some SpaceX was just the largest IPO ever. Anthropic is about to go public in the next couple months, which they're expecting could be even larger than SpaceX. And then soon following within 6 months is going to be OpenAI. And so I don't remember the number of millionaires that the SpaceX IPO created, but it was a large number. And so you're going to have like one after the next of people who, they're making good money, right? Like a software developer or, an engineer at SpaceX probably making several $100,000 a year, which is really good money. But then now they're getting like a $10 million paycheck. And so there are a lot of people moving from what typically would be classed as like middle class to very wealthy, and they're spending their money. Man, all of my highlights, like that's the stuff I wanted you guys to see, and now I can't really see it. Um, so consumer spending overall eased a little bit in July. Now, one weird thing is that apparently the World Cup, which is obvious, like that would help, but apparently like Amazon Prime Day moved from July to June. And there are so many people that spend money because of Amazon Prime Day now that they actually think that some numbers in July were down because of the fact that it moved from July to June. That Amazon Prime Day has enough to impact like national sales numbers is wild to me. Um, but basically, July is still a top three reading in the past 3 years in terms of overall consumer spending. And excluding, like I said, excluding gasoline, spending still rose by 4.3%. So it was down from June, but still very much in the top. And then you can see that the job growth, even though the government and ADP say it was lower, according to, so Bank of America is basically taking all the data from all of their bank accounts that they have and aggregating it together and showing like who got new jobs. And they're saying that actually job growth, this looks more dramatic than it is, was closer to 2% instead of a 0.5%. Um, but the interesting thing, and this is something to watch again, is that the lower income brackets saw by far the most significant job growth. Actually, the middle income bracket saw declining job growth, according to Bank of America's numbers. So, very, very interesting stuff, in my opinion. Um, so again, I kind of already talked about all that stuff. So I thought I had one more slide in here, but I guess not. Dang it. Did I put it somewhere else? Anyways, all right, well, we'll come back. If I didn't put it in, we'll get to it next month. All right, active listings. So they were up a tiny bit, 2% compared to last year. But again, these are national numbers, nothing overly crazy. New listings, which was a trend throughout the national numbers as well as ours, decelerated, which is interesting, but not overly surprising given some softness in the market. Unfortunately, Realtor.com has gotten into this thing where sometimes they don't include the pending sales data. This happened. This is the second time I think this year it's happened. So, which is kind of a bummer because it's been a really good indication of demand, but we just don't have it on the national level. We'll look at it locally here. Days on market ticked down year over year, which is something we have not seen in quite some time. So that'll be interesting to see if that trend continues. And then median list price dipped for the ninth straight month. However, we're not seeing the sales prices dip. So to me, this is just an indication of sellers maybe becoming a little bit more realistic with initial list prices. Price reduced number up a little bit, but really on the same trend line. I'm sorry, down from last year, but still up from last month, but similar trend line to what we're used to this time of year. So nothing crazy there. It'll be interesting to see last year at this time, though. You can see that the price reductions kind of were flat at this time of the year. So they peaked in June. It'll be interesting to see what happens for this month to see if that trend continues. Man, these highlights are going to kill me. But basically, the total housing inventory was down according to real or to NAR, which is weird because it doesn't match up with realtor.com stats. So they said that inventory was up on realtor.com, and here it was down 4.6 months of supply. The median home price was still up compared to last year. So it's, I think that says the 57th consecutive month of year over year price increases. So that's pretty wild. And then affordability improved across all regions, which I'm assuming that has to do with increased wages increasing at a higher rate than housing prices. That's the only thing that makes sense because rates have been going up. So the only thing that could happen is either housing prices went down, which we know really wasn't the case, or wages were just growing faster than housing prices for the first time in a while. Still not obviously making up the huge gap that we've had over the last few years. These are always interesting to me. This coming from agents directly, that the median days on market was 29, up from 28 last month. First time home buyers accounted for 29% of sales, so that was down from June, which is whatever, not no significant changes on any of these. I think maybe the most interesting one is cash is down like 5% year over year. And then I always like to just point out the fact that distressed sales have remained at like 2%. Basically, they were a year ago, they were last month, and they are this month. Like all of the YouTube sensationalism around, like, oh my gosh, there's this huge increase in foreclosures, just not supported by the data. All right, so jumping into Columbus. So number of for sale properties up 13% year over year, which is significant. New listings were only up 2.8%. So when you have new listings up 2.8, but you have an increase in inventory of 13, that means that basically the market is not absorbing the new listings. So that's an indication that there are just fewer buyers in the market. And so that's something we want to keep an eye on. Now, one interesting thing that I will point out is the gap between these two is getting smaller, which isn't abnormal as we go into the fall, but you can see last year this gap was much larger. Oh, this is going to be terrible trying to draw with a mouse. But so usually when the gap gets, that means that more of the new listings are being absorbed. So what we could see, so you can see that basically we were flat all the way through basically November, other than just a little bit of fluctuation. And so what would be interesting if this gap closes earlier this year, meaning there's fewer new listings but a similar number of buyers, we could see inventory either stay flat or even start declining a little bit sooner than what is normal. So that'll be something I'll be watching for next month. Um, Days on market exactly the same as last year. And actually, the sales price compared to original list price is actually better this July than last July. So, um, interesting to me because last year, now the interesting thing will be as we go into the fall, if interest rates stay the same. Last year, we were seeing interest rates start to decline in the fall. So, if interest rates remain elevated this fall, I don't expect this trend to continue, but I guess we'll see. Months of supply, I mean, we're still in a very strong seller's market. I think it really goes as a whole, but we certainly have pockets that have slowed down, and it's certainly true that pricing matters more than ever before. New construction's in the same boat, still not terrible, but it's again something we'll keep an eye on. 3.1, not far off from where were we last July? 3. So not really much of a change. All right. We talked about the in contracts and new listings and what that does to the inventory. So again, we're at max inventory over the last 15 months in Dublin, no different. However, look what happened to the new listings and in contracts, meaning every single property that came on the market was essentially absorbed by a buyer last month. So when that happens, we would expect inventory to basically be flat. You have to have a gap between in contracts and new listings in order to increase inventory. So if we continue to see new listings drop, which they did, again, look at from this or from July to August last year, there was actually an even larger drop in new listings. It's just we saw that same drop with pendings, and so there's still a gap there. But if we were to see that change, we could, trend back towards the seller's market. Whereas right now, I feel like because of the increased inventory, we've actually been trending towards a buyer's market, and we kind of see that across the board. You see with new construction though in Dublin, we actually saw an inversion. So there were more that went into contract, at least on the MLS, than new listings. And so in theory, that would lead to less inventory. And we did see inventory levels drop a little bit. But I think next month, unless there's a big increase in new listings, we would see the new listings in new construction be dropping, or the overall inventory, sorry. Hilliard, same thing. Uh, Obviously a little bit different, so it wasn't inverted, but the gap is very small. Although we've been at a small gap in Hilliard, which is why our inventory has kind of stayed low in Hilliard compared to everybody else. Um, Similar on the new construction. Olentangy, a little bit more like the total market in Columbus. So we've definitely seen inventories going up in Olentangy, but we do see those two getting went into July. So we'll see what happens August. If you remember last year in the fall, Olentangy was growing significantly in terms of overall inventory with not so much buying happening. So we'll see if that happens again this year. New construction though, kind of on par with everybody else. We've talked about most of that already. All right, one thing that I am looking at is this. So our active price basically year over year is exactly the same, which has not been the case for quite some time, meaning, last July, the average list price was exactly the same as this July. Typically, that's a leading indicator that we're going to see a flattening of the sales price. When the active price flattens, usually the sales price is a couple months behind. However, our lagging indicator of average sold prices was still up 5%. So we're still seeing appreciation in the market, which is pretty interesting. We were at what, 399 for an average sales price last month. It started to drop off, which happens every single year. Um, but it hasn't dropped off significantly. Since this is a red line, I'm going to change my color here if I can. One thing that is interesting is the fact that if you look at last year over here, you can see that we saw a big drop off from June to July. You didn't really see that at all this year, and you didn't see a big drop off this year for August. It's actually very similar. If we went back to a couple of years, you would see that typically in the fall and winter time, so this period here, we see a pretty big decline. And then basically in the spring, everything pops back up and makes up for that gap. So this year, or this last winter, we saw a lot less downward pressure on prices. We didn't see a lot of appreciation through the winter, but then we were starting off at a higher place. We're kind of seeing that trend line again here. So it'll be interesting because you can see like there was a pretty big downward slope here in the late summer, early fall last year that we're not seeing so far this year. So this could be just again, basically we're creating a floor in our market where we're just not seeing that downward trend. So we're not seeing as big of a bump in the spring, but we're also not seeing as big of a downturn in the winter. So what that means to you from a pricing perspective is that maybe you don't need to anticipate as much of a drop in activity as we go into fall and winter as we have in years past. In terms of softness of pricing. Now, I think we are seeing it, or at least I'm seeing it as an agent, but the numbers really aren't showing it. So that's making me second guess myself. So I'm going to ask you guys a lot of questions here in a minute. Total showings are down compared to the last couple of years. So again, I'm going to change my ink color because I've got this green here, but you can see our red line is here. And so you can see like the last few weeks, we've been below the 2022 trend line as well as the 2025 trend line. And then we just touched the 2023 trend line. So we're definitely down compared to last year and have been for like the last few weeks. When we look at the showings per listing, same kind of thing is we're looking at definitely fewer showings per listing. Now, one big question I had is, and I'm going to make you guys answer, I'll not moving because I really want to know this. So one of the things that I'm bummed about is this new showing platform. I forget even what it's called through the MLS does not have as good a data as showing time does. So is anybody scheduling showings through that new portal? Forget what exactly it's called.
I think it's like Super One, isn't it? Is that what it is?
Yes. Yeah, and then there's another word for it, but has anybody used that or is everybody that you guys are seeing still using showing time?
Still showing time.
Okay, that's what I've seen too. So I haven't seen anybody that's using that new platform. So
Yeah.
I was just gonna say if there are people using that new platform, it could be a reason why we're having this decline in total showings that are showing up in showing time. But if you guys aren't really seeing anybody using that, then it probably truly is the market.
Mm.
Anybody else? If you guys are using this, please let us know. If anybody has had to set up a showing, that would be helpful to know. Or if literally no one's using it.
I had an appraiser. You tried to use it last week, but I just got a hold of them directly because I it forced me to create a login and all that stuff. I didn't want to deal with it right away.
So they were though trying to get that scheduled through that
Through
new
Super
system
One. Yep,
for your listing, but it
correct.
wasn't like a listing that you were trying to show that was forcing you. Because
That's
I mean, I
correct.
I could see, I mean, given that it's included in the cost of our MLS dues, like I could
Mm.
see a lot of people moving to that showing system just because showing time is an extra expense. So we're basically paying for two systems if we don't switch. So my expectation is that there's probably going to be more and more people switching. I don't know if Showing Time has annual contracts or not. This was a question I have, but I've spent zero time looking into it. But if Showing Time has annual contracts, then that would explain why not very many people have leaned into it. But my expectation would be as those contracts expire, that people will start not renewing and moving to that new showing system, which is going to completely kill our data, which sucks. But it is what it is. Money talks, right? Mortgage applications are down, which again is another leading indicator. Not overly surprising considering that interest rates are higher than last year. Um, but it's definitely something that we will want to keep in mind because if we look at where we are now versus like where we were in the fall, we're lower. The orange line is what the interest rate was, and then the gray kind of filled in area are the number of purchase applications on this chart. So It's definitely oftentimes a leading indicator of what traffic is going to look like in our listings over the next 30 to 60 days. So this would be a great chart to show a seller when we're talking about pricing to say like, hey, Mr. and Mrs. Seller, right now we're seeing fewer mortgage applications on a national basis, at least, likely due to interest rates. And so, if we are going to list our house here coming up in the fall, we need to be aware of the fact that, there might be fewer buyers, which leads to less competition. I will also point out that, like we talk about every holiday, but we have Labor Day coming up. As you guys probably have already figured out, Labor Day is super late this year. It's about the latest it can be. It's like September 6th because it's always the first Monday of September. And since Tuesday is of September, it's very late. But remember, don't recommendation is showings drop off pretty significantly every single Labor Day. So don't list your house on the weekend of Labor Day. That's the huge bonus that you get here for being on here, but you're definitely going to have, much decreased buyer activity on a holiday weekend. So I would recommend, it's kind of hard to say what's going to happen given we kind of have this extra weekend before Labor Day, if the activity is going to be kind of like a normal weekend or if people are going to just still wait until after Labor Day. But either way, the weekend after and the weekend before almost always see more activity than the weekend of. So just remember that. Gosh, I wish I could get rid of this chart. It's getting so old that I feel like I probably eventually need to get rid of it, but it's all the way back from last summer, basically. But I just still like to point out buyers in the market is at historically low levels, but so number of sellers. And so this gap is the reason why listings are going up. But as soon as interest rates are to drop, and it started to happen at the beginning of March this year when rates dropped to 6%, all these buyers flooding the market and they will eat up our inventory. Like, look at how many buyers were in the market like back in 2016, 10 years ago. And so if we went back and then we saw it again during the pandemic for a small period of time, but if we went back to buyer levels here, our inventory levels are well below where the inventory levels were when we had buyers there. And so just because we're a little bit higher than here doesn't mean that we won't still be in an extreme seller's market. So just remember that piece of things. That we're just because we have a little bit of inventory doesn't mean the sky is falling. All right, rent prices. I mean, there's really not a lot of exciting stuff here. Basically, they're flat and they've been flat for a while. The rental market is in pretty decent shape, in my opinion. There are a few areas that are a little bit less desirable that definitely are more difficult to rent in right now. But for the most part, it is pretty flat. Shameless plug. I haven't done this before, but I figured I would because there's too many of you that reach out to me and don't know. But I do have a property management company. We do pay referral fees. So if you have investor clients or you guys have properties yourselves that you need a property manager for, we're willing to pay a referral and obviously would just love the opportunity to have a conversation. So feel free to reach out if you have questions about that. Sources are here, and then I also actually have not put the Bank of America stuff. That's on each individual slide. So I have forgotten this the last couple months, but please, if you would like me to email you the slides, put your email in the chat, or you can email Allison at marshhomegroup.com, and she will send you slides as well. So, yeah. So what do you guys have? What questions? We've got about 10 minutes left. I mean, if you guys want to end early, we can do that. But if you guys have any anecdotal stories or other questions that I didn't have slides on, now is the time.
Hmm.
Either you guys are all asleep, great job that you have no questions. Come on, somebody's got to have something. What are you guys seeing in the market? Like I'd love to hear. I feel like there's almost no rhyme or reason to listings that sell quickly versus not. But Rachel, you want to talk. I know you do. You've been
I'm always
ODing.
talking too much.
Well, let's hear it.
I have an issue managing expectations with buyers.
That's great.
Just
All right, tell me more.
um like when right off the rip they're like, "Yeah, but I'm not paying full price." So I'd like to start 30 grand under. And it's
Okay.
like
Are you
I
okay losing? Rachel, I can so appreciate that out of curiosity. If putting that offer in meant you lost the house, how would you feel about that?
Well, that is what happened. And then for a month, I like ended up bothering the agent, like, could we please be the backup offer? And so now they are that did fall out. Now our backup offer got accepted at the list price. So he ended up seeing that it was a mistake, but now it's like asking for a new roof, asking for mold remediation. It's like it's always something.
Well,
And
part
they
of it, I will say, and those other people that have been in the business for a long time, like this is just like kind of like normal. Like I know for the last 5 years we've been in an environment where like nobody would, sellers could basically just like say everything that they want and they get everything they want. But my first thing is I would say like when they originally do that, ask that question like, so is putting an offer in 30,000 less than list price worth losing it? And if the answer is yes, then I'll do that. I'll tell you based on all the information I sent you and my conversation with the listing agent, I think it's going to hurt your ability to get this house. But ultimately, you're the one that has to make the decision. It's like one of my favorite lines, and I use it most often with sellers, but it can be used with buyers in these situations, is like, my job is to provide the data. If you want to ask me my opinion, that's fine, but it is your money. Now, at some point, like as a buyer's agent, you also have to have the conversation where, like, I'm spending my nights and weekends showing you houses. And if you're not serious about buying something, meaning that you expect every seller to take 15% off, then, like, at some point, we need to have a conversation about, that. But I do think that asking questions is something that um, we can all be better at. And I would say, like, me now versus me 15 years ago as an agent, like the biggest thing I've gotten better at, if I could point to one thing, it's just asking questions and saying what you want to say in the form of a question is always less adversarial than making a statement. So
Mhm.
again, saying, "Are you okay losing this?" And then maybe like, "What do you mean?" And then you have now the opportunity to, by answering their question, to say, "Well, put yourself in the seller's shoes. Their
Mhm.
neighbor just sold for 20,000 more than they're listed for. They think they're listing their house at a bargain, and you with no supporting data are going to put in an offer that's 30,000 below list price. Like, can you? Yes. It's not against the law, but if you were them, would you be happy and excited to work with you, or would you think that you were not serious?
Right.
Right? And
Yeah.
so just like posing questions to them, trying to get them to go into the other person's, whether because the same conversation's happening on the listing side, right? I would love to hear some of those conversations that you guys are having too and how you're overcoming that. But trying to put a seller, you know, into the right frame of mind where houses are sitting on the market. their neighbor just sold a year ago, which seems like yesterday to them, and had 10 offers. And then now you're going to sit here and tell them that their house might sit on the market for 30 days. And oh, by the way, you should also price it 20,000 less than what your neighbor sold for. Um, those are all things that, again, it's hard to say, but again, you can use the data to kind of back it up. But at the end of the day, the conversation's the same. Rachel, if you really want to list your house at that price, that's fine. But understand my professional opinion is
Mm.
that you're probably going to be sitting on the market for 45 days. And then we're going to be talking about a price reduction. It's not a guarantee that you're going to sell in 45 days. I think you could get zero offers and you may not have the showing activity. Is that okay with you?
I love that.
So again, following every statement up with how do you feel about that? Is that okay with you? Does that align with your goals? Like for me, obviously every seller wants to get the most money in the least amount of time. So if we go for the most money, are you okay with the fact that we may have to sit on the market with no guaranteed that you're actually still going to get that money? While your neighbor might list at a lower price and end up selling for more because it creates competition. Are you
Hmm.
okay with that?
Mm. Yeah.
And then just let the silence do the heavy lifting. Like
Hmm.
we are all love to talk, me included. And again, when I was new in the business, it was the number one thing that I've changed in my approach is I let the silence after the question do the heavy lifting instead of trying to just like tell them all the reasons why I'm right and they're wrong. Like, are you like the emotional side of it is what's gonna usually make people move. I forget. It's a bold law, right, Andrea? Like logic makes you think, emotions make you act.
Hmm.
And so, like, how can you take price, which is a very logical thing, and tie it to the emotion of we can list at that price, but if we put ourselves in October and you've been dealing with showings for 2 months just because we wanted to try that price out, is that okay with you? Or would you rather list at a price that I feel like will make it move in today's market and avoid the pain of your family maybe getting out? Because remember, inventories are still relatively low. So it's not like listing too high always means that you're not going to get showings. Like I have a listing right now that I didn't think it was listed that high, but it's listed. Obviously, the market's saying I'm listed too high for the house. Luckily, he's moved out, but I mean, we've had like 20 showings. And so, like, if somebody was living there, 20 showings in a week and a half we did get on offer, a couple offers last night, but over a week and a half, we had 20 showings. Like, if you're living there, like, that's painful and not getting offers, right? And so, like, are you willing to put your family through that? Only you can answer that. Like, I'm going to list it and work hard to sell it, but honestly, I'm not having to get out 20 times over
Hmm.
the next 2 weeks in order to, list high and not get offers.
Yeah. 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 No, I
All
like
right,
that.
Francis, Andrea, come on. You guys are always like my go-tos in terms of talking, and you're not.
I
You guys
don't
might.
have a lot to say other than I can relate to a lot of the conversation that's happening right now for sure.
But let's talk about your multifamily that you listed for a
Yeah.
second, though. And like, obviously, like Matt's been the lead agent on a couple listings lately, where they've sold very quickly. Like, and so if you're able to, say as much as you want, because I'm sure it's not closed yet, but like you had multiple offers on that one. So
I
it's like if
did.
you're feeling this conversation, like, was that a situation where the seller just listened to what you said? Was that a situation where the seller was like willing to price lower than they needed to? Like, what was your, if you
Yeah,
don't mind
she
sharing?
was well, she's an investor obviously with it being a duplex and all. But she was very receptive to my opinion. She's not local. So she's like, listen, I trust you, whatever you say, like I get it. We're gonna do whatever you recommend. And I had another one, small little house on Refugee Road. Multiple offers on that one too. And she did try to push back on me on price, and I was like, Karen, now is not the market to be trying to test the price. And she's like, okay, okay. And she listened, and again, multiple offers on that one as well. And I find the ones that they're not listening to me. I had one of my clients, adorable house in Clintonville. And when we listed, it was priced on point, but like we had multiple offers, we got into contract, we fell out, and now we're sitting. And they are not budging. And in fact, so his sister is an agent in the Carolinas. And he was like, what are your thoughts on increasing the price? I'm like, I think that's a terrible idea, and we're not going to do that. So, yeah, it's like people that are unrealistic and they won't budge. Like they will not bring their price down at all. And I'm like, it is different now than when we first listed. Like, you guys need to listen to me. And so I think we're going to ultimately take that one down.
Yeah. And
Yeah.
I think, I mean, it's a realistic conversation. And I think unless something drastically changes with the market this year, your what you just described is what I'm seeing a lot, and that is that a lot of these properties, like they're either moving weekend one with multiple offers, or they're sitting for 30 to 45 plus days. Like there's almost no in between, like unless you're doing price adjustments. And so I do think if the market stays the way it is right now, I do think we're going to see like back to the old days where like there's a huge number of people that expire or cancel like by mid-October to early December because of the fact that like they just don't want to adjust. And honestly, if somebody has the flexibility to do that, like I'm having that conversation with a couple of people where it's like, hey, like if you don't have to sell, like if interest rates go down in the next couple months, like we could see a pop in activity that could make your price look attractive. So if you don't need to, like, I'm not going to push you, but I just want to make sure, back to Rachel, your initial point about expectations, I just want to make sure that you understand what the consequences of that decision are. Like if you're okay with sitting on the market, I'm okay with you sitting on the market. Like I have a big multifamily that's a 9 unit in Arlington where we had tons of activity in the spring, went into contract and fell out. And then since interest rates have popped up, like the numbers just don't make sense. And like that's not going to change. And like this is a $2 million property. Like they would have to drop their price by like 300 or 400 grand, and they're cash flowing on it. So I'm like, why? Like if I were you, I wouldn't drop my price in order to just sell right now unless there's something that you need the money for. And so like so in some circumstances, and my clients appreciate that. They're like, dude, that makes complete sense. We're not in a place where we have to sell. And so we don't want to drop the price. And I'm like, that's fine. I mean, obviously it's not fun as an agent to have a listing that isn't selling because we don't get paid if it doesn't sell. But at the end of the day, like my experience is that the clients appreciate the honesty. Way more. And I was actually talking to some friends yesterday about how, like, again, my 25-year-old self, like, always tried to make every conversation positive and like, and my 44-year-old self is definitely more about like, hey, like, let's have the tough conversation now. Like, if you keep doing this, your house is not going to sell, period. Like, it's just not unless something changes that's outside of our control. And so, like, just being like blunt and upfront with people, I think, again, 85% of people appreciate it. Some people like need to have rose-colored glasses, and you'll get better always at learning which ones those are. But I think having those blunt conversations, and like you said, Rachel, just like setting those expectations. And so the only other thing I would ask you, and you don't have to answer, this can be hypothetical, or that's not the right word, but this could be like just a general question. But like for those of you on the call, like how good of a job are you doing at the listing presentation and also at the buyer presentation? Are you doing a buyer presentation about what the market looks like and taking all these graphs that I talk a lot about listings, but at the end of the day, these graphs should be a buyer conversation. Like we are still in a seller's market. Like just because houses are sitting on the market for 2 or 3 months also doesn't mean that every seller is willing to take an offer that's 15% below list price. Like this is not 2009. Our prices are not going backwards. And most sellers that are sitting on the market are doing so because they know they're overpriced and they're okay with it, not because they're desperate, but they don't have the equity to move the price down. And so I think like having those honest conversations, especially with first time buyers who probably have a parent or a relative or a friend in their ear telling them that they're dumb for buying in this market anyways, like that, those things are things that call out the elephant in the room before you even show a house. Francis, you've been unmuted. I don't know if it was on purpose, but I'll stop talking now and let you talk for a minute.
You're awesome. That's all I have to say.
Oh, geez, come on.
No, I
Come
agree.
on.
I agree totally with what you're saying. I mean, I have a couple good examples in Lewis Center. I had a house listed probably 6 weeks ago or something like that at I don't know, it was 870. We ended up going into contract on like the first day for 9 something with two offers. And then now I've got one sitting in the woods of Door Knock at 670, and it's a great house. And part of it is it's August, and August is slow. But what I'm seeing is just that price range really between like 6 and 700,000 is really tough right now. I think above 700, it's like I haven't had any problems with the higher end, but at that, I'd say maybe even 550 to 7. I mean, that really is kind of a struggling, to me anyways, what I'm seeing is a struggling market. On the seller side, I started doing a preliminary seller market report before I do go meet with clients, and I did it created, just like you said, with Claude through Chat GBT. And I have to tell you, it's amazing. I mean, it goes through and gives kind of an executive summary. It gives the current community competition, what recent sales of, I mean, it's like bullet pointed, and it's professional. I had to send it to a doctor this morning. He sent it back and he's like, this is amazing, and I can change it for, like AI, you have to go in and check and make sure the stuff's right. But stuff like that, as far as getting listings, and not only getting them, but really it talks about the importance of pricing right, and even in the demand is present, but you have to, it has to be clean and updated, and if it's not going to perform like other houses. All the things that we say, but very succinctly and very. It's a great document to inform sellers, and it's also, I think, an easy way to help you get to a reasonable listing price. But I think what you're saying is right. It's just kind of a fickle market right now.
I had not thought about that. I use AI quite a bit, but I haven't used it specifically for that. But it just made me think, and I'll share my aha. But without making this an AI class, because I actually have to jump. But one of the things that might be cool is to take your listing presentation and load it in, depending on what you're using. Like I like Claude and Gemini. But I've heard that ChatGPT's latest one is actually better again. So it's like I'm probably going to end up with all of them. But create like a project, I think it's called in Claude, or a gem in Gemini, and I think I can't remember what it's called in ChatGPT. But upload your own listing presentation in there, and then use that like project and ask the question to like create a customized listing presentation to XYZ area based off of your listing presentation. So instead of having like this general listing presentation, how cool would it be if everything that you talk about in your listing, which it sounds like is basically what you're doing, could be, kind of streamlined and targeted towards their specific area or neighborhood? That's a really great idea.
And that's exactly what I do. I use the same template, and I'll go in and say, okay, now do this using this